Welcome to an update on a country we haven't covered often in recent weeks, Slovakia. Katarina, what is currently driving economic growth in Slovakia?
Hi Georg. So economic growth is mainly driven by domestic demand at the moment. We saw a significant improvement in the labour market, so the unemployment rate fell substantially and we have seen real wages grow at a very high rate. So last year the growth was 4.2% on average. The domestic demand was mainly due to households, so their consumption grew at a steady rate, but also investments. And all this contributed to better consumer behavior, spending and confidence.
How does this affect the Slovak banking sector, especially its retail part?
The retail part saw an improvement last year, and in retail loans we usually saw a growth of about 10% in the past decade, but 2014 was an exception. It went up to 13%. This was mainly due to housing loans that increased, and the growth in housing loans can be attributed to obviously the low interest rates we have seen, but also because of the labour market and the improved consumer confidence, as well as real wages that grew at a steady rate. People took out more housing loans at the same time as the stable house prices contributed to more housing loans being offered, and that all contributed to actually housing becoming more affordable last year.
Now, what about the deposit part? Does the improved confidence of consumers lead to a decline in deposits, or is this caused by the ultra-low rates stemming from the ECB actions?
The ECB is indeed keeping interest rates very low at their record low levels, but we have seen both a growth in spending and actually increased savings rate as well. The saving rate last year was quite high at 9% of disposable income, and obviously we saw an increase in retail deposits at a steady rate in the past few months, actually an increased rate at the start of 2015. So we can see that both of them can go hand in hand together.
What are your expectations for the domestic economy this year and its implications for consumers?
We expect that the domestic demand will still remain the main driver of growth. The GDP growth rate for this year should be at around 2.5%. We also hope and expect that domestic demand will not be the only factor contributing positively to growth. Net exports should start contributing positively as well, and obviously we expect the labour market improvement to continue this year and unemployment rate to go further down, as well as real wages to grow steadily.
Katarina, thank you very much for your time.
Thank you.
Dear viewers, thank you very much for your time. Have a nice weekend.